Hello again, John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Lately, we've been getting tons of mixed messaging in the markets, whether it's real estate, stocks, what have you. There's like zero growth in Q4 in Canada. New jobs are 10 times what they were supposed to be in January. Inflation coming down, but it's still sticky. Canada will most likely maintain its overnight lending rate tomorrow in the announcement, where in the US, it looks like they're going to raise somewhat. Maybe it's 25 or 50 basis points. Blackstone defaults on $500 million in Europe. Canadian banks are putting cash aside for rising loan defaults. Resale home prices were up in February. New home prices are going down. Anyway, let's take a look at it. One thing I want to talk about first, I got one commenter every week. He says, "Why are you so negative? Put some positive news." So I guess it's all a matter of perspective. What's positive? Is he talking about from a seller's point of view? So I think we're going to see prices did go up in February. So there's some positive news for you, but it is negative for all the buyers out there. So again, I'm looking at the reality of this. Runaway home prices is not a positive thing for anybody, including the sellers and your children when they grow up. So it's all a matter of perspective. But let's look at the new home price index. As you can see, looking at this chart here, the home price index has started to decline. So new house prices overall are coming down in Canada. And I've even seen home builders drop their prices, some significantly, some just a bit. But here was an email. This was on an email I got January 25th this year. You can look at any of these models here. I looked at the Beauty, 2,500 square foot, 4-bedroom, 1.284 million. This was January 25th. And the deposit structure was 145,000 over 90 days, 40,000 when you sign, and then there's 35,000 in 3 additional deposits. So $145,000 deposit structure and $1.284 million for that house. Here's an email just a month later. This was on February 28th this year. The exact same model, 2,500 square foot Beauty, down to $999 with a quick closing. And here's the deposit structure, $9,000 deposits. I don't know if that's 4 draws of $9,000 at 36 total or $9,000 total, but you can see it significantly dropped since just 1 month ago. Okay, now let's get into these statistics from across Canada. I have most places, and we'll see if there's some positive news as the commenter wanted. Positive for sellers, probably negative for buyers. But again, I don't think it's going to be sustained, but let's get right into this. From the Vancouver Real Estate Board, February's listing data show a continued reluctance among prospective home sellers to engage in Metro Vancouver's housing market, leading to below-average sales activity. With sales remaining well below historical norms, the number of available homes for sale in the region have continued inching upwards. And as you can see there, sales are down 47.2% year over year. Okay, now let's take a look at the average prices there. I'm not going to go over this in too much detail because I've charted this separately, but you can see all types of homes are up month over month, but we'll get into that in just a minute. Now on to Calgary Real Estate Board. Lowest February inventory since 2006. Consistent with typical seasonal behavior, sales, new listings, and inventory levels all trended up compared to last month. However, with 1,740 sales and 2,389 new listings, inventory levels improved only slightly over last month and remained amongst the lowest February levels seen since 2006. Okay, now let's see what the data shows us. So here's the inventory and sales chart. You can see the gap between the February 2023 sales is more significant than last year, but of course, both are low inventory and sales as outlined in their press release. Months of inventory is down overall for February, so not a good sign for inventory for buyers in Calgary right now. This is an interesting chart here. This is the total price change by percentage month over month for Calgary. And you can see in the 2023 here, February, we're almost as low as it was in the pandemic, in the beginning of the pandemic. So the year-over-year price change has dropped significantly. So just keep an eye on that when you think Calgary is untouchable. They are down year-over-year percentage-wise by quite a bit, almost pandemic levels. And here's the average price chart, the green bars. We're going to get into that in just a minute on my other chart. Let's move on to Greater Edmonton Area. Edmonton housing sales see strong month-over-month increases. Total residential unit sales in the Greater Edmonton real estate market for February 2023 decreased 43.4% compared to February 2022, but saw an increase of 31.2% from January 2023. Sounds interesting. Let's look at the data. New listings are up 15.1% month over month. They're down 12.9% year over year. The sales are up 31% from January. I'm expecting January was a very slow month, always in Edmonton. And they're down 43.4% year over year from February last year. So again, we're seeing this trend of sales still continuing to be down year over year significantly, 40 to 50% in most areas. And at the bottom there, days on market significantly higher, except for apartment condominiums, but all the rest of the housing types are significantly higher days on market. Okay, now let's look at all the gains and losses for all the Western provinces, or that I've included today. So Vancouver detached, they're up 7.5% month over month, 143,000 in 1 month. So pretty significant. Lots of buyers, little inventory still out there. Year over year, they're down just over 10%. And from the peak in April, they're down 11.1%. The attached up again, 4.2%, down 9% from February. And also February was their peak, so it's 9% from the peak. Vancouver condos up 2% month over month, down 8.3% from the peak, which was February, or $70,000. Calgary surprised me. I thought they would be up month over month, but they're actually pretty even, down a little bit month over month, down 7.5% from February, which is the same as their peak last year, so $41,000. And Edmonton had a 0.2% loss month over month, down 10.3% from last February and 11.6% from their April peak. Okay, let's move on to Ontario, and starting with Toronto. So the overall sales in Toronto are down 47% from February last year, not surprising. New listings are down just over 40% from last year, so interesting dynamics. Sales are down 47%, but new listings are down almost 41%. Days on market has risen significantly since last year, obviously. And the average selling price is up month over month, but we'll get into that in just a second. I have a lot of requests for Ottawa, so I've included Ottawa. I have it here, and we'll dive into it more in just a minute in the chart. So you can see the average sales price is down 15.2% over last February. Same with the condos, it's down 12%. The number of sales in residential is down 42% from last February and down 31% from last February in condominiums. Moving on to the ITSO surrounding, so Ontario surrounding GTA. This is my area, so I have more data on this, so I can do a little bit deeper analysis on it and kind of see and explain what I think is going on. Starting with the average percent of last original list price. So what are houses selling for in relation to their list price? So you can see for February, it has ticked up significantly. We're at about 97% right now. At the same time, months of supply, it is still low, but it did rise for February, both January and February. So that is rising, and I'm pretty sure we're going to continue to see that into the spring. Days on market did drop, so it took less time to sell your house in February because, of course, the supply and demand issue. And I've highlighted all the Februarys here in black. So you can see in February, days on market usually does drop significantly. Actually, there is no February where it hasn't dropped. It always drops significantly. Now, looking at this chart, if you look at the black lines, you can see right after you have March and April, it usually goes for 1 to 2 months after, 2 months at the top before those days on market starts to rise again. So moving on to new listings. New listings in February are at their lowest levels in 13 plus years. 13 years is as far as these charts go back, so that's all the data I have on this. But let's compare that to the number of sales. The sales are the lowest also in 13 plus years. So we have both listings and sales. It's not one or the other. So both, we have this market that's slow, but we also have a lack of listings. So they're playing into each other, and no one's really benefiting from this situation. So I don't know if the sales are the lowest in 13 plus years because the listings are the lowest in 13 plus years and there's nothing to buy. I'm sure it does play into it. But anyway, let's continue. And the average price, I'll get into the numbers in just a minute on the other chart. But you can see we're at about early to mid 2021 pricing right now. Now, before the sellers get too excited and the buyers get too depressed, I did preliminary stats for March just to see where it's going, if this upwards trend in house prices is continuing, and it looks like it's not. Here is the chart from the same data from ITSO, from all those areas surrounding GTA. You can see in the circle there on the right, which actually is the right shoulder, and we've talked about the head and shoulders. That was February, the one going up, and March, you can see we've already declined to the first week. The average house price is now lower than it has been in February already. So positive news for sellers February, but again, I don't think it's going to be sustained, but it's still early into March. But again, looking at this data, it looks like it is trending down already. Okay, now to summarize all these areas, you can see just looking at the month over month in the left column there for TREB, ITSO, Hamilton. I've added Hamilton in there. I've had requests for Hamilton and Ottawa, both residential and condo. Except for condo in Ottawa, all places are up like 5 to 6% on average. And it ranges from, 33,000 to 57,000 in Toronto. So some pretty significant gains there. But looking back at last year, we had $100,000 gains in 1 month. So now we're, 33, say in ITSO, or 47 in Hamilton, where they did have the $100,000 gains in 1 month last year. Of course, this is the February effect we've talked about. Moving on to the year over year, the middle column here for February, down 17.9% in Toronto, down 23% in ITSO, 21.8% in Hamilton, 15.2% in Ottawa residential, and 12% in Ottawa condo. And from the peak, all those numbers are also the same because the peak in Ontario was February for almost every area. Now on to Quebec and Montreal. Despite the market context, very few sales below asking. So it seems like things are pretty good for the sellers in Montreal and Quebec right now. Checking out the days on market for the province, it has come back down, just like most areas in Canada, for the spring or February market. I call it the spring market now because it pretty much acts like the spring February. And for prices, Montreal single family up 3% month over month, Montreal condo up 2.7% month over month. The province of Quebec, 6.9% for single family month over month. Pretty significant gain there in a month. Quebec province for the condos, 1.5% gain month over month. And you can see here in the middle column, the year over year for February, down 6.4%, 6.3%, 5%, and 4.2%. So an average of 5% or so down from the year over year for February. Montreal and Quebec didn't have their peaks until later in the year, into April and May. So they're down 11.2%, 7.3%, 11.1%, and 10.2%, depending on the area and house type. So yeah, it looks like it's been a pretty good February for sellers across the country. I would say outside of Ontario, they're looking at only about a 10% loss and between 5 and 8% or 7% gains in 1 month. But they've only lost about 10% from the peak in most areas besides Ontario. Ontario, you're in that 20 to 25 or 18 if you're in GTA. And we've had a very good February, $50,000 gains in some areas. But it looks like March is already starting to show signs of the market continuing to slow again. So I wouldn't get too excited if you're a seller, and buyers, don't get too worried. Like I said in my last video, it doesn't look like these gains will be sustainable and will be short-lived. So that's all for this video. I'll see you next week.